Hey everyone, welcome back to Corporate Decoder, the place where we untangle the truth behind corporate fine print. And today we're diving into Therapeutics' annual shareholder meeting information. And let me tell you, they're asking for some pretty big changes, and it all revolves around their stock. So this is basically a heads up to their shareholders about what is going to be discussed at their upcoming annual meeting the 15th of December. It is a virtual meeting, no fancy get-togethers, just log in online. They're looking to elect new directors, get a nod on executive pay, and then there is Proposal 5, which is a really big deal. This is where things get really interesting. TherapeuticsMD wants to increase the number of authorized shares of their common stock. Right now they can issue 32 million shares. They want to bump that up to a whopping 640 million shares. That is a massive increase, 20 times more shares than they're currently allowed to issue. Why would they want to do this? Well, they say it is for flexibility. They want to be able to raise capital by selling more stock in the future, expand the business by acquiring other companies, or form strategic partnerships. It basically gives the board a lot more room to maneuver without having to ask for shareholder approval every single time they want to issue more stock. They claim they don't have any specific plans right now, but having this flexibility is key. Now, what does this mean for you if you own shares? More authorized shares mean the potential for dilution. If they issue a lot more stock, your ownership percentage goes down, and each share theoretically becomes worth less because the company's value is spread over more shares. They also mention this could make it harder for a third party to acquire control of the company, which can sometimes be a good thing for existing shareholders if they don't want a takeover, but a bad thing if they think a takeover offer might bring a nice premium for their shares. Looking at who owns what, Rubric Capital Management LP is a major player, holding about 25.73% of the shares. Clearline Capital LP holds around 5.5%. The directors and executive officers together hold a much smaller piece, about 1.7%. This suggests that the big decisions will primarily be influenced by these major institutional investors, unless the individual shareholders show up in force. Now let's peek at how the folks running the show are getting paid. For 2024, Marlon Walker, the CEO, took home about $759,174. Joseph Ziegler, the principal financial and accounting officer, earned about $120,000. Keep in mind, Ziegler is operating under a master services agreement with his own consulting company, Jay's Advisory Group, which is an interesting setup. Looking at equity awards, Marlon Walker has some outstanding options and RS's Joseph Ziegler, on the other hand, has no outstanding equity awards listed at the end of 2024, which is notable given his role. Our directors get a pretty decent chunk of cash. The chairman of the board pulls in an extra $22,500, and committee chairs also get hefty retainers. For example, the audit committee chair gets $30,000 a year. Interestingly, Justin Roberts has elected not to receive any compensation for his director service right now, which is quite a statement. The audit committee is reporting that they've reviewed the company's financial statements with management and their independent auditors, Berkowitz Pollock Brandt Advisors plus CPAs, LLP. They're confident in the financials for the year ended the 31st of December, 2024. Speaking of auditors, they're asking shareholders to ratify the appointment of Berkowitz Pollock Brandt for the 2025 fiscal year. They've been the auditors since July 2023, taking over from Grant Thornton. The fees for Berkowitz Pollock Brandt in 2024 were around $201,345 for audit fees, which seems pretty standard for a company of this size. So, what is the big picture here? TherapeuticsMD is clearly looking to position itself for future growth and flexibility by significantly increasing its authorized share capital. This is a common move for companies that anticipate needing to raise funds or engage in acquisitions. However, shareholders need to be aware of the potential for dilution. The executive compensation appears to be in line with typical executive pay, though Joseph Ziegler's arrangement as an external consultant is unique. The company seems to have a stable auditing relationship and a clear path for director compensation. Ultimately, the most critical item for shareholders to consider is Proposal 5, the massive increase in authorized shares. The board is strongly recommending a for vote, which is understandable given their stated goals. But as a shareholder, you'll need to weigh that potential for future growth and flexibility against the risk of dilution to your existing stake. It really comes down to your confidence in the management team's ability to effectively use those new shares to create value. Alright, that is our breakdown of TherapeuticsMD's latest filings. What is your take on these numbers and what they signal for the company's future? Do you think the share increase is a smart move or a red flag? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions and insights. Thanks for watching. See you next time.